Gentlemen, welcome back to the channel. This is going to be an exciting video for many people. I am going to break down what Tesla stock could do next year. I will also explain why I like Tesla stock from a risk to reward perspective today in our markets, given the exogenous enthusiasm that we have out there in broader markets that's really not being reflected in Tesla, especially following the almost 20% decline we have seen over the past couple of weeks. Now, in these scenarios for next year, there's a lot of economic scenarios between the economy is great, it outperforms, people get back to spending, real estate starts to pick up, so on and so forth. And then you have the other side where things get worse and we kind of just get worse slowly and maybe come close to a recession, don't go into a recession, though I think that's more of a base case assumption. And then you have the other scenario, which is really bad. Some kind of exogenous event happens, an oil spike, we go into some kind of deeper recession like 2007, 2008. So there's really three different scenarios here. There's the best case scenario, base case scenario, worst case scenario. I will explain my targeting, my expectations for next year for Tesla stock in all of these scenarios, and again, where I think Tesla stock will go in all of these different scenarios. So with that said, I do just want to establish one thing. With the robotaxi event last week, and I talked about this in the last video, there was really two sides of the robotaxi event. There was the robotaxi side, and there was the Model 2 side. Wall Street had a lot of high expectations for what we were going to get from the Model 2. That's why I was concerned heading into the event, because this was a robotaxi event. This was not a Model 2 preview or showcasing. And that's where Wall Street was way too optimistic. But again, if you actually were going into the robotaxi event with no expectations for the Model 2, just solely the robotaxi update, we actually got exactly what we were expecting. Okay, that's clear. And I think from that standpoint, it really shouldn't have been a negative catalyst, probably not a positive catalyst as well. It was literally everything we expected. Start of robotaxis in 2025, full self-driving to all Tesla vehicles by 2025 to be fully autonomous. Like, that's really all we got. We got the cyber cab, but we already knew what that was going to look like for the most part. You know, we didn't really get an upside surprise nor a downside surprise. It was the Model 2 that we just didn't get any details on that caused Tesla stock to fall about 9%. Now, I actually think that is a benefit now. You get to buy Tesla stock at a cheaper price. And if Tesla and Elon, which this is uncertain, keeps their guidance for the Model 2 by midpoint next year, that is a massive upside for Tesla stock. Believe it or not, next year, it's more important the Model 2 comes, we start production of that, than it is we get robotaxis, right? In a limited capacity. Even like the next gen lower price Tesla is going to move Tesla stock a lot more than the robotaxi for next year. So I think that's important to differentiate. I think we're going to get that Model 2, that lower price Tesla event coming by the end of this year, most likely. And that's going to fuel the next real leg of optimism for Tesla stock. And estimates will start to move even higher for growth to pick up and hopefully bottom line profitability. Now, I think it's also important to acknowledge the framework of a lot of this video, because the Fed's going to be lowering rates a lot. If the economy does worse, they're going to lower rates more, and that should boost profitability more. Now, if the Fed takes a slower approach, then it's not going to have as big of an effect on profitability, right? Because Tesla right now is buying down the interest rate. So as the Fed is cutting rates, Tesla's buying down less rate, and that boosts profitability for every Tesla that Tesla is selling. So think about the base case scenario for next year. Let's start with the base case scenario. Base case scenario is kind of at trend growth for the economy, which is about 2% GDP. Inflation's no longer a problem. The consumer's not great, but they hold up, allowing the Fed to cut rates along the lines of their dot plot, which is multiple times to get the federal funds rate down to about 3.5% next year. It may be like 3.75% or 4%, but still make considerable progress on bringing rates lower. In this scenario, I think the estimates are probably accurate for Tesla. Wall Street's expecting 2025 EPS at about $4.43. Now, the multiple on Tesla stock today, let's start with that. If I guess if we're looking at next year, 2025 earnings, looking at forward earnings, Tesla stock's about $218 per share. Let's see, divided by $4.43. Tesla's next year multiple is, call it 49. Okay, for next year's EPS off of $4.43. It is a lot higher than that if you're looking at 2024 earnings, which are expected to be $3.22 per share. But just sticking with that multiple for next year, you could be looking at Tesla stock heading into next year at, pretty appropriate prices to where we are now. Now, in the base case scenario for next year, if we do consider $4.43 is accurate, Wall Street by the end of next year is going to be considering 2026 earnings. So by the end of 2025, we're going to be pricing in 2026 earnings. If we can just raise the overall earnings by 20%, which would be 88 cents by 2026, then you're looking at earnings of about $5.31 per share. Now, here's where it gets tricky. Do we use the multiple that is forward-looking, or do we use the multiple that Tesla is trading at currently? That's where things can get a little discretionary. But if we use the multiple that Tesla is currently trading at, forward earnings that is, at about 49, Tesla stock could be a $260 stock by next year. Now, if you use the multiple that we are trading at right now for 2024 earnings, which is, like 85, it was 95, but the stock's come down quite a bit, then you're looking at Tesla, that could be a $451 stock next year. And this is more of a base case scenario, okay? This is not the most optimistic scenario. In a more optimistic scenario where Tesla stock, is really helped out by the Fed lowering rates more than expected because inflation is falling, the economy kind of does okay, it just trends. Either scenario here, I'm not expecting the economy is going to accelerate to the upside, right? I think staying around trend growth, around average growth, 2% GDP, consumer does okay, is the only, optimistic scenario for next year. Unless real estate out of nowhere starts to pick up and we start to really get moving on real estate and that stimulates more consumer spending behaviors, that's really the only thing that I can see as an upside surprise to economic activity. So let's just assume, let's say the Fed cuts rates a lot and Tesla's able to boost per vehicle profitability, and Tesla ends 2025 with $6.50 of EPS. Then, judging off of a forward-looking multiple, you could be trading about $318 per share. That is, by really the start of next year, if estimates go higher. So that could be like an end of this year kind of scenario. Okay. But if we consider what it could look like looking at 2026 numbers, if we think EPS can grow by 30%, again, in a more optimistic scenario, then you're going to be looking at total EPS estimates for 2026 at about $8.45 per share, which is really not that crazy. Some analysts have their estimates about $9 per share for 2026 EPS. So we are not that crazy here. If you times that by 49, which is the forward-looking multiple, then you're at $414 per share, almost precisely the exact all-time high that we hit in 2021. Now, if you use the current multiple on that, then you could be looking at something along the lines of about $688 per share. Now, that would imply 30% EPS growth from 2025 to 2026. You would have to really start to see profitability get boosted. I think this is why it's more of a best case scenario for Tesla stock. Now let's talk about the worst case scenario. And this is really why I like Tesla right now, because Tesla's already went through the bad as far as margins, as far as a slowdown in demand, the overall EV sector. And I think that's why like Stellantis and GM, they're starting to see some negative year-over-year comps, and Tesla's comps are actually starting to get a little bit better. I think Tesla just felt the burden first, and it'll be faster to kind of pick up momentum again. Now, in a more worst case scenario, if we consider Tesla stock, let's say $4 of EPS is what we get next year. The Fed's not able to cut rates that much. People just don't buy Teslas as much. You could obviously create a scenario for a more worst case scenario. And then you give that 49 times multiple. You're looking at Tesla stock about $196 per share by the end of this year. And I mean, around that for even next year. Right now, in a recessionary scenario, things could get really nasty because the multiple could be compressed even more. If you consider that the current multiple is around 80, then you could see maybe a 40 handle on that, maybe a 35 handle on the multiple. Then you're looking at Tesla stock at about $140 per share. That could be next year, that could be this year. It really depends on how, market sentiment evolves. But the reason I really like Tesla right now is if the economy does accelerate and comes in better than expected, if we do have this soft landing, or just things are not as bad as what is priced into Tesla stock, then I think there can be a lot of upside potential there. We can start to look at higher growth from the Model 2, the cheaper priced Tesla, and we can start to look ahead to robo-taxis even more. If things are bad, if we do go into a recession or come close to that, you're already pretty well priced for that. With Tesla stock that's down, almost 50% from all-time highs, like you're not priced for perfection in Tesla. You are discounting quite a bit of, bad news, bad expectations in Tesla stock today. So unlike Apple, unlike Google, unlike Amazon, Nvidia, all of your other big tech names, if you want that relative degree of safety, if you will, Tesla's a great option. Tesla's business is not going to collapse or fall apart, right? I think we're beyond that point. Is Tesla too big to fail? Absolutely not. But the odds of Tesla just dramatically slowing down is pretty damn low at this point. Tesla's a pretty well-established business, I would say. So I think you've already priced in a lot of bad news here. And the upside surprise is pretty well a base case, in my opinion. I think the base case scenario is pretty accurate. But I do think a combination of the base case scenario and a better case scenario could be in play for Tesla, because it's kind of a trade-off. If the economy does weaken, fine, that's more rate cuts for Tesla. That should boost profitability more for Tesla. If the economy does okay, Tesla should sell more vehicles, but potentially at a lower margin. So that's where things could get a little bit wonky in some modeling that you can do for Tesla. Now, I think in some kind of fear moment, if we do get fear towards the end of this year, if we do see the economy weaken towards the end of this year, you could definitely see Tesla fall back to that 140, 150 level. And if we do get back to those levels, I think that is a massive buying opportunity. I think that would be an opportunity you would not want to squander, to wait around and see if the stock goes lower. No, that would be a time, in my opinion, to buy as much as possible. But I'm not a financial advisor. I'm not your financial advisor. Anything can happen. And I think going into next year, you really want to keep an open mind that anything is possible. You could see Tesla at a $500, $600 stock next year, or you could see Tesla at a $200 stock next year, or $150 stock next year. But again, you're trading at $218 per share. What's a more worst case scenario? 150, right? 130, like that would be really bad. If Tesla stock is at those levels, I think the rest of the markets are going to be at a pretty bad place also. But the upside could be $600 per share. The upside could be 200% next year. The downside could be, 25, 35%. I like the risk to reward that we have in Tesla with a lot of bad news that is priced into it. And especially as Tesla is no longer in the 260s, it's now $218 per share. That provides a little bit more comfort on the risk to reward proposition for Tesla. So those are just my thoughts. This is kind of how I internally am thinking about Tesla heading into next year. So you guys, let me know what you think down below in the comment section. What is your predictions for next year? What's your best case, base case, worst case scenario? Let me know all of that down below in the comment section. That is going to do it for this video. Stay safe out there, and I will see you in the next one.